do in the week ahead. George will be joining us as well a little bit later via a recording, and we look forward to hearing his thoughts on the smaller stuff, not the smaller stuff, but the shorter time frames and how he's handling that and what he's looking to trade in the next few minutes, I guess, but certainly ongoing through the week. How are you doing? How are you handling all of this volatility? I hope it's not daunting or too daunting for you, and you're able to get on the right side of some of these big moves. I got on the right side of a couple of these big moves, but I couldn't ride them. I just didn't ride them out, which is a bit of a pain in the bum sometimes. But you get it wrong, and you're going to suffer. I haven't really changed my MO at all as far as that's concerned. Maybe there's a little bit of room for improvement on that line, but banking money, is it a real bad thing to do? I don't think so. Never is. And I'll definitely be looking to maintain that sort of attitude. Maybe I could leave a little bit more open in terms of trades like Euro Yen. Oh, do I really want to look at that chart? Because we got out here, right? Our trailing stop got hit up here, and we've missed pretty much half of the trade. Look, that's going to happen. That really is going to happen in volatile times. And there's not a whole lot you can do about that, because it could just as easily have gone in the opposite direction before it went there. Fact is, it didn't. And those of you who maybe stayed into that trade, good upon you. I commend your spirit and your risk appetite. Let me put it that way. Is that going to change anything for me? As I said, probably not. I might leave a little bit open for these potentially massive moves, but then you take on board, oh, we've just missed that one, right? What do we do now? Well, it's pretty simple. We wait for the next one and see if we can do it all again. Hopefully this time we can catch a little bit more of it if it is to do that. Massive moves on Friday, and on the weekly charts we saw a lot of big moves. Interestingly, a few that didn't move, and they're the ones that are more interesting to me, frankly, for this week ahead. And I'll be probably concentrating on those more than I will the ones that have broken out. Why? Look, I think the ones that have broken out of these long-term ranges are probably giving you an indication as to where they're going to head in the next few weeks, depending on what happens, of course, in a geopolitical sense. And I couldn't argue with that. I think jumping on board those is a dangerous prospect right now. But should you get some retracements on those big moves, I think that's probably a good idea to trade in that direction. I would certainly be looking to do that. Not that I'm a trend trader in any way, stretch or form, but I can't deny that those breakouts are really, really strong, and most of them closed on either their high or low, depending on which way they were going, and that is a strong indicator that there's probably more to come. Now, I'd like to know why that was happening at that precise time. I know we had the non-farm employment change number come out, and certainly on the dollar pairs we saw that move as positive for the dollar. In the ones that I've looked at anyway, I haven't looked at all of them, but that seemed to be the case. And perhaps that's trend setting as well. I can't help but think the dollar has got a little bit more strength left in it. And the issue right now is that the dollar is at a resistance level. What that really does to me, and goes to what I've probably just said before, is wait for those retracements on those big breakouts and look to head in the direction that they are pointing. So I think that's probably where I'm at. Maybe we don't get the retracements, and that's entirely possible as well. But I'd be looking to sell the retracements if they're going short, or if they were headed short, and certainly buy them if they were going in the opposite direction. But the ranges, as I said before, are the ones that are going to be on top of my list, as always. So nothing changes in that regard. And I'll probably be looking at my old mate Aussie Kiwi as one of the best of those. Nice little double top there. We've been waiting for a lower high. It hasn't come yet, but I've got to say this, the Aussie is on absolute fire. Kiwi is as well to a degree, but I think the Aussie has probably gone just that little bit too far for the credentials that it's holding at the moment. In particular, as I said last week, the RBA being, I won't say stubborn, I'll say consistent in their approach to not raising interest rates in the near term. We'll see how that pans out, but generally you will find that a country who's raised its interest rates in one instance and the currency that you're trading or that you would like to trade against that currency is refusing to raise its interest rates, to my mind, that can only result in one direction. And so far we're not seeing that, but I am really intent on finding a short here on Aussie Kiwi at some stage, purely on that basis. But now the technicals might start to line up.
We're not
well.
actually seeing your chart.
Oh, I haven't got any shared. That's why. Do you really want to see it?
Oh, why not?
Okay, that's a good idea. I mean, what I've said till now really relates to just about everything that's moved and gone out of its range. But like I said, there's a few that haven't. This is one of them, Aussie Kiwi, and I'm really desperate to find a lower high in here to get to trade it short. I'll share a few more with you a little bit later, but it is Monday and Ash has joined us. He hasn't screamed out that there's a trade on, and that's surprising me.
There was a trade, mate. There was, but I didn't want to cut you up. I didn't want to cut you off. The difficulty is, I mean, it wasn't only because there's a cutting you off. The difficulty I'm now finding is that because of the way I trade, I don't know how so much easier it is for me to kind of like give people the trade in the way that I suspect other people are trading, which is with stops. But there was a trade this morning, and I'll show you it. Well, in fact, it'll feel like a kick in the teeth if I do, but I will show you it only because there might be an opportunity still later. This one here. So I took a trade down here and I got out of the gap, but it might still come back. Now, the reason that I didn't shout it out was partly because you seem to be in mid-flow, but also because I'm changing my bands of, normally where I would get in, I would just get in, and if it comes against me, I'd get in again, and it comes against me again and again. But I'm now having to widen out the areas that I'm going to kind of go in again, which means that this becomes a bit more difficult for other people. I mean, as it turned out, there was a little stop that you could have put down here. I got it at 7,800, which was here. So there was a little stop down there. And I was going for the long. And the reason I was going to go for the long is that when I looked across the board, I didn't see, just before this move today, any further kind of moves that were suggested to go to the downside. I mean, we've got gold. Where's gold? And now, incidentally, that would mean that if you want to get in, then this area now becomes of interest. So 78.44 becomes of interest. But I think there's some upside in this market. I think there's some upside right across the board in all stocks, because I think that we've come down far enough now in fact, if you look at this on the daily, the S&P hasn't broken down. So I think there's some upside in the S&P. I think the Nasdaq's in a dangerous place, but I don't think it's broken down sufficiently. I still think there's a little bit of upside there. But, when you look at gold is now gapped to the upside. Now, this could be, just further emotion, and we might continue to see this continue to move in that direction. But it's starting to look a bit exhausted. This starts to look like an exhaustion gap. It's right at the top end of the range, of the trading range up here. We've got this little spike here, but if we switch it out to the monthly, you can see this is the monthly, where the monthly opened before the big move to the downside. So gold looks to me like we've got this exhaustion gap going on, which would suggest a move lower. Not that it would necessarily be that easy to trade right now, but if gold does break down here, then it could come down pretty hard, and it might not be a resolution in Russia that does that. It might just be some quietness You know, it might just be sort of like nothing further to report. You know, Russia is struggling to kind of break through the defenses at this stage. There are nations right across the world that are adding aid to the Ukraine as well, the Ukrainian cause. So it might just be that starts to ease gold back down a little bit. We've also got the Fed in less than 10 days. So nine days time, we've got the Fed, ECB out today. And I just wonder whether we might just see a little bit of calming down, you know, after the initial move over the weekend, which is really what's happened, is that we've gapped on a Monday because of a little bit of panic over the weekend. So I think there's going to be some retracement. And that's, you know, that was where I was looking at the market. And it's a lot easier if you're on the right side to make more money. Hearing you say about taking profit and coming out early, I completely agree. The only thing that I've changed is the area that I'm taking profit. So rather than, you know, first contact actually becomes a bit further away in some respects. You know, it's not now, you know, 10 to 15 pips. It's more like 50 to 100 in some respects, you know. So
because
you can actually make, yeah. So there's at least 3 times the profit on the table right now. Do you move stops in gold to gap? Oh, that's interesting. Okay, let's have a look. Yeah, that's a really interesting question. So if you were long, the question is, would you move the stops to below the gap? I personally would. I mean, it's, you know, that would be my the way that I'd want to play it. I'd probably want to make, you know, play it on. I wouldn't want to put it right under the gap. I'd probably want to put it on this one here. I mean, even though that is an area of support, ultimately, the gap should be supported as well. So, you know, it's a little bit difficult, but somewhere in this region, I think would be a wise place to start putting stops. Yes, that would be my personal take on it, because if it's coming down, yeah, it could stop here. Now, this is the next level of potential support here. Well, in fact, there's 2 in this one little area. There and there are the 2 areas of support. The next one is down here. So as long as you, to my mind, as long as you're in this range here, then you're pretty good. Now, it would depend on where I got in. If I got in at the bottom, I'd probably be, you know, somewhere below the gap, just a little bit below the gap, maybe a couple of dollars below the gap. If I'd got in round here, I probably would want to put it up there, because I think that there might be another opportunity at 1950 on gold for further upside. But I do see gold maybe easing to the downside. And if it doesn't, this gap becomes really dangerous for gold. You know, the same as WTI. You know, there are areas now that look at the gap, look at this as well. Same thing. Now, it would depend on how this ends. But if this ends negatively on a daily bar, that is going to look like a exhaustion gap, and it's going to start looking like a shooting star. And we know with a shooting star, it's a bearish looking piece of price action. Now there's a bigger gap down there, so the entry under this bar looks a lot better to go and fill the gap, and then maybe even start going again. I don't know, but this one looks pretty good. The gap on gold's a little bit lower, but again, looks like we could see some downside in oil. Looks like we could see some downside in gold and silver as well. You know, silver's another one that could see some downside as well. So and the VIX as well. I looked at the VIX this morning, another gap in the VIX, but look how it hasn't really taken off. You know, we had that we had the news over the weekend, gap up, and it hasn't really it hasn't really started to motor. So for that reason, I'm quite bullish on equities. You know, certainly for a few days anyway, and I think we should see some upside. So that was the reason. So now the FTSE is easing back to the downside. So I think there's an opportunity. I feel a little bit guilty saying it, but I don't need to take it now. And I feel guilty because you know, I could have given you guys a trade this morning, but I'm just a bit concerned that if I do and you trade a specific way, that I could be only leading you halfway home. You know, rather than sort of saying that this is the way that this is the way that I'm doing it, which is going to be completely different to the way that that you guys are going to be doing it. But the overall thing I will say is that, to me, the market is bullish, certainly for this morning session. So if you can find yourself an entry, then that you feel is safe, then personally I would say it's on, and it's on to the upside. I don't think it's on to the downside. That'd be my personal take on it.
To the question you had on gold,
Yeah,
this is something we discussed last Thursday and maybe even last Monday. Where is your risk at the moment? That is the hardest thing, I believe, in this market right now.
yeah,
Where do your stops belong? And
yeah,
one thing I can say is that I was going to say I'll guarantee. I can't guarantee anything, of course, but you can almost guarantee that it will go to a technical level.
yes,
Now, what level that is the really, really hard thing to do. And I'm not doing it well. You know, I've been in 2-3 trades: short euro dollar, short euro yen, short something else. I can't remember what it was, and I can't get it right. And you know, I've been around for quite some time, so for players new to the game, this is a real challenge. If you are
yeah,
in these trades, if you're in these breakout trades that are just look like they're just going forever, they won't. It's as simple as that. So you do need to have stops that are, in my opinion, trailing to some degree. And to my mind, pick your level, pick your technical
yeah.
level. It will be there, but which one, I don't know.
Do you know what, mate? I think you make a poignant point. Is that you know, when markets are raging like this, they look like they're going to go forever, but inevitably they don't. And we saw exactly the same with Bitcoin. Bitcoin bulls were saying this is going to $1 million, and they believed that it was going there, or at least 100 grand. They believed it was going there without any kind of rest or retracement, and they do inevitably do that. Now I'm on the flipper now with Bitcoin. Now to me, Bitcoin's starting to look like a really attractive buy, because I don't care about this stuff. This stuff is gone to my mind. You know, I mean, I do have a position in silver that I had right at the bottom, and I'm going to hold on to that. But when it comes down to you know, buying in at these particular levels, doesn't interest me. I'm not interested in chasing the move. I would much prefer to see it come down and see if I can get something of relative value. You know, relatively cheap. So cryptocurrencies, in my mind now, is one of the areas that I'm focusing on, because I just think that we finally got the moves that we needed to make it interesting. You know, at 60 grand, Bitcoin at 60 grand, it wasn't interesting at all. But now it's near 37, 40, 30, you know, in these kind of areas. Now it's becoming interesting. And you know, this is the time that I'll start building up positions. But, you know, that's just different approaches. But as Jeff says, these things do come down. So continue to chase the long. You can do it for a period, and you might do it for longer than you think. You know, it's one of those things, or longer than I think. It might just sort of continue to rock to the upside. But eventually, when this turns, it's going to turn harder, and I guess that's the point. The more exuberance, almost double the amount of fear when that starts to kick in as well. But you know, we are in the midst of the early stages of a conflict, so it could be many months before this does turn. But we know what the markets are like. You know, they can turn on a dime, and it does make it. I think almost better for the, as I said before.
I agree. It's far more interesting to me when the market has made these big moves.
Oh, it's brilliant.
Because
it's brilliant.
Yep.
You can't deny the benefit of volatility. You know, volatility is just a trader's best friend. It's superb, and that's what we've got right now. And what's that come down to now? The FTSE's coming down. Oh, is it coming down or is it going up? It's coming down now. Now the FTSE looks interesting again. You see, now there is a long here on the FTSE 100, and no, I wasn't going to take this because. No, do I want to? No, I don't want to take it. This is above. I got it in down here, so I don't really want to take this. But this is a long. This is a definite long on the FTSE 100 right here, and you could take it right to the top of the bar, which leaves you 70 to the upside. Now you got a 1-to-1. You know, if you want to take it, but that is a valid trade. That is a valid trade to the upside. Doesn't look like it's going to be weak. You'd have to put your stops down here. I would suspect. Now it's a 1-to-1. Now the question you have to ask yourself is, am I interested in such a volatile market just for a 1-to-1? And that's something that everybody else will have to do, you know, because and as I said before, this is now first contact. This almost becomes first contact. Maybe there, you could argue, but even if it was there, that's now 30 pips rather than 15. So that's gone up. That's gone at double. That one's at 17. Now this almost gets better. If this comes down at the low, that's an even better position, because then all of a sudden you've got a potential long with first contact a long, long way away. Stops at those lows. And now you're looking at a 2-to-1. So I think there's a few different ways to play it. But to me, as I say, the FTSE sentiment this morning looks good. Shell is up 5%, and I guess Shell and BP are starting to move because of the higher price in oil. But the mining stocks are also doing particularly well this morning. So there's definite trades on them, the FTSE. You know what? I will probably take this if this comes down to the bottom. I'll probably take a long as well. But as I say, my strategy will be a bit different. I'll be holding on to it, and the way I will play it is that if it comes down to the lows, I'm just setting it up. If it comes down to the lows again, I'll go in long, but I will then move to a weekly chart, and my next long won't be until 65.60. So where I would have got in shallow, of relatively shallow before, maybe at the bottom of the bar there, I won't do that. I'll extend that out. So 65.60, we're looking at a potential, another 4 to 5% move to the downside before I added another position. And because of the lack of leverage, then I'm able to do that. But if you are a trader that uses stops as your protection, so mine will be different. But if yours is a stop protection, then it looks like this low or this low. So that's where I'd consider first. Where is my stop loss going? Down there or down there? And that means now when I calculate where my entry is, whether it's there, I now know what my risk to reward is. So you kind of have to think about that. But market looks okay to me, mate. It looks like, I suppose that was the other thing. I also looked at the euro, and I looked at the euro versus the Swissy. And again, look at that inverted head and shoulders. Christine Lagarde has got the unenviable task of addressing the market first this period, where she has to come up.
You like punishing me by showing me these charts when I was short these.
Yeah, sorry.
Right.
Sorry, but I think the euro is going to turn. I think the euro is not that far away from a turning point. Now, this bar isn't complete, but again, we looked at a potential shooting star. This is now starting to look like the start of a morning star. If this bar holds like this, next bar sort of starts to cut in, then you've got an indication that we're starting to get a morning star. Now, if that was to happen, and I think the euro is a really interesting one, because this pattern is going to potentially happen. If it does happen like this, if tomorrow's bar looks something like this, we've got Monday and Tuesday with a morning star with a press conference on Thursday. That's going to suggest that there is some support down here. And we might actually see a bit of a bottoming out with the euro. Now, the argument is, why would you go long euro with such troubles in just on its borders? But the answer to that is that eventually the current situation is baked into the price. So unless it escalates further, this actually becomes value. Mm-hmm. If it starts to clear up a bit, it becomes really good value. So that's why I think the euro is a potential long down here. I think the FTSE's are long down here. I think the Nasdaq's are long. The S&P's are long. I think gold's a short. Oil is a difficult one. I think it's a short, but I think with oil, it's going to be whether Putin comes and says, right, I'm going to choke the supply. If that's happened, it takes another leg up. If he calms down on that and Biden can do some deals, maybe with Iran or somebody, then oil does come down, and it comes down pretty hard for a while. So I'm contrarian at this stage, mate. I'm completely the flip of what the market has been doing. I'm counter trend trading the fundamentals, because the numbers, the data actually is not bad. It's just that we've got this geopolitical situation which either is going to change the data in future, or it just bubbles along in the background while the data continues to do okay, which it is. It's, I don't know if you saw the jobs numbers from America on Friday, but they were all right.
Eventually that will kick in. I 100% agree with you, and you don't need to talk me into being contrarian. That's for sure. So the difference, I suppose, with the way I approach that is that I've got to see something technical before I'll actually act on it. And that's kind of where I'm at. More than happy to see a double bottom, or as in your case, I think you're talking about a morning star. If I see that and I get confirmation of via a higher low, then I'm with you 100%. But until I see that, I've got to be, just a little bit circumspect.
Yeah, understandable, mate.
Anyways, George is normally with us at this time. In fact, we're a little bit over time for George normally, but he's coming to us today via recording. So let's shoot over to Johannesburg and say, g'day, George.
Hey guys, I trust you all well. Thank you, Jeff. Thank you, Ash, for allowing me this brief moment. Looking forward to April when I have a lot more. In fact, I'll have time to sit with you guys for a lot longer on this show. But for today, while I sort myself out, just allow me to do a quick video recording. So the week is starting, very interesting week. And for me, a few things are very important when a week starts, just to get a sense of where the market presently is. Euro versus the dollar. We've been selling off, and this thick blue line is very key on all the charts. As long as the market is in a bear trend, this side of this thick blue line, which is our 10 EMA, which I use as an indicator of the strength of a trend, our broad framework, our broad bias, if you like. Remember, I'm 100% right 60% of the times, is that we are in a bear market. It does not mean that for us intraday traders, we don't take trades, counter trend, we do. So if the market reverses here, if today ends up as a decent enough reversal candle, tomorrow you quite legitimately can look for some buys going long within this bear market, but then you have to mark where your potential levels of resistance and support can be. So if there's a reversal back into the trend, you manage it. High of Friday, low of Friday. If the bears are strong, you can see they trigger the sale there. That's the goal. That's where they want to go to. But now, that sale triggered. If you're in the market, you could be in it holding a trade. If you are not, then you got to find ways to get into the market. And one way for me to look at getting the market now is see if we get a test of the open, or if the market reverses strongly, then we've got to look at a 50% pullback. But so far, bear market on the euro, got to find ways to jump into the market. I'm looking just at the daily charts. Of course, you have to go to the 5-minute. Now, gold is interesting. I mean, off this level of resistance, it's the level of resistance way back here somewhere. We spoke about that. Okay, there it is, that level of resistance. And I've been continually saying, we are in a sell zone. Now, you can see how the market has been trending this way. Big trading range. I spoke about that, I think, last week, and that's controlling the market. While we are in a sell zone, there's a lot of selling taking place. But you got to keep our eyes on the 10 EMA. So the market is still in a bull market. But look at it. What does this look like to you? This doesn't look like a strong bull breakout. So this is more like a bull leg in a trading range. So we're still in a sell zone presently. What I'm looking at, I haven't found opportunities to go short. So you might say, hey, George, you've been missing all the trades. Fantastic. That's probably the other times that I'm wrong. I'm wrong. I'm wrong 100% of the times. I'm wrong 40% of the times. That makes sense? I'm 100% right 60% of the time, which means I'm wrong 40% of the time. And if you're wrong, if you're in a trade, you manage it and minimize the loss, so you get stopped out. And if you're not in the market, you just watch and wait. I still think we're in a sell zone on gold. This is a strong trading range price action. So I'm still thinking failed breakout. So I'm going to keep looking for ways to go short, but I'm not ignoring this trend. And why am I then looking for ways to go short? Because it's a bull leg in a trading range. And if it's like that, I'll probably get opportunities to sell short, go sideways for a bit in this area. If the bears are strong, they'll create sideways price action, and then a bit of a sell-off. If the bulls are strong after the trading range, they will keep on pushing the market up. Hang Seng 50, very interesting. Lot of gap downs, which are fantastic because they provide us opportunities to trade where. So there's a gap down today. What you gotta wait for, unless you're in the market right from the open, you gotta wait for a pullback to see if the market's gonna come and bounce and test that off, and then look to go short. However, if by the open of the London session, if the market goes sideways at 50% of the trading range, you got to be careful how you trade. You got to look for breakouts either above the trade range or breakouts below. But always when you get gap downs, that's a sweet spot that you got to find any pullback into to trade back into the trend. So gap downs are good. Gap downs are good if you're not in the market, right? And if it gaps down in the direction you're looking, fantastic. If you're in the market, if it gaps down in your way, beautiful, make a lot of money. If you're in the market and it gaps in a different direction, you could have a bit of a problem with your account. UK 100, again, gap down. So this one is a bit of a classic one to look at. Red line low of yesterday, high of yesterday. I'm definitely going to be looking to see if a gap is closed anyway within there today, and see if we bounce off that gap and that test of the low and try and find another sell opportunity. So that one is definitely on the watch list. S&P 500, said trading range price action going sideways. And I think I mentioned that last time. Whatever entry you take here on the 5-minute is trading range price action. Expect reversals, which are fantastic to trade if you're able to be in the market to watch your market. Nikkei 225. So here's what's interesting. There is low of yesterday, high of yesterday. The market has already moved a long way. And I'm not going to be looking to short anywhere down here, because if you look at the measured move from the high to the low, there is the full extension. The market has already reached the measured move of that breakout. So if the bears are strong, there's going to be a pullback, bulls buying off this level of support, profit taking off this level of support. Market may come back and test that previous low, or it might come back and test yesterday's low, and then we look to sell. Okay, Bitcoin, if you trade in Bitcoin 24/7, trading range price action after this coming off the high of a trading range, that's where you want to take a trade. So welcome down here. In the middle of the trading range, probably best to wait. Guys, thank you very much. And I will see you guys on Wednesday. Now, just something very briefly to show you. You will be getting an announcement from the office. We are launching the Wednesdays at the market. The second Wednesday of every month, I am in the market for the 4 opens and the close of the day. Information will come from the Actions to Wealth office. So ignore my website reference there. But I look forward to seeing you guys to trade a lot more live on Wednesdays. Thank you, guys. Really look forward to seeing everybody. And trading buddies, we'll see you guys shortly.
Fantastic, George. Thank you, mate. Yes, we'll see you next week, either via video or live here in Trading Buddy Central. You were about to say something, yeah?
I've taken a trade on the FTSE, mate. I've taken a trade on the FTSE, partly just to show everybody what I'm going to do. But I still like it. It's not. I'm just irresponsibly taking a trade. But the long is in, and I'll show you. What it is. So down here, here's the trend line now. As I say, if you're a stop trader, you're going to want your stops probably down here. If you're entering within this area here, if you are going to do the leverage, do the no leverage trade, then you can then start to kind of ascertain what's going to happen later down the line, which is going to be it's going to be a good 400 pips below before I'm going to get into this again if it starts to tank, and I'll probably hedge it as well. But I like this level, mate. The reason I got in here rather than the trend line in the end is that it is at 7,800. So, sorry, 6,800. So we're at 6,800. So, there's a potential level of support here. Maybe it does come and touch this first. But I did see just enough kind of price action movement here to suggest that we could actually get a hold here and not touch the low. So not to miss the opportunity. I've taken a long. Now, the two questions that I've got is, do I come out here? In fact, I've got 3 really. Do I come out? Not do I come out? Because I know I might completely be wrong about this, and it might continue to tank. Is this the target? Is the daily pivot the target, or is the target just to leave it for the day? Now, the reason that might be, now this is a better price, as you can see. So if you want to get your better price than I got, I was just a little bit early there, unfortunately, but no big deal. So this is why I think the possibility that I just leave this open could be on. And that's because of this, the ECB press conference. I think there's a chance that that we might well get a rally into that press conference, because Christine Lagarde is probably going to have to say something that's going to aid this market out, I would have thought. And as I said before, if there's no further if there's no further escalation to the conflict, then it's possible that we stay stationary, and then other factors can start to take precedent rather than the conflict, and a potential press conference could be one of those things. So it's possible that you could stay in. I don't think it's wise, if I'm honest, as you were sort of saying, Jeff. In this kind of thing, there's nothing wrong with taking profit. So I think what I'll probably end up doing is having a good look at this. If it gets up here, what I'll probably end up doing is moving stops up and you know, potentially, you know, not getting quite as much out of it as I could have done, but rather than kind of staying in and being too gung ho here, then I'd probably just move things up, because it'll still be a really nice move. I mean, if it gets back up to the highs there, then we're looking at a 120 pip move. So you know, anything around about that is pretty nice. I mean, that's a 2% move to the upside on the FTSE 100. So we'll see how it goes.
What is the ATR currently, mate?
Oh, that's a great question. That is a great question. Let's have a look.
Because I assume it's out, like above normal.
Oof, yeah.
like, oh yeah, look at that.
I mean, that's the 5. So let's have a look over the course of the 4 hourly. Yeah, this is January, which is probably, you know, if you sort of like start looking through, this tends to be sort of, you know, where it is. Occasional spikes to the upside here. That's at 84. In fact, let's do it like this instead so we can see more data. Yeah, it's way up.
Yep.
Way up. And if we look at this on a daily, then this is the highest it's been since this point here, since COVID.
Yep.
So
yep.
Makes it, you know, and this is the thing, isn't it? And I, you know, I'm glad you brought this one up, because the thing with the ATR is that when you do see these things in, it says trade, get ready to trade. You know, this is not a time to be sitting on your hands. And I know it sounds sort of, it sounds a bit dangerous, really. But if you are a short-term trader, not well, even if you're a long-term trader, actually, but if you're sort of like looking for small short-term opportunities in the market, then you've got to trade. You've got to get involved in this market. That's just the job. You know, the job is that we have to take risk on, and you know, just get involved. And yes, you know, the main thing is to be responsible. Let me look at the FTSE now. FTSE is coming down here, and I've got zero panic on here. Absolutely zero panic. Would I care that it came down? Yeah, because it means I've got work to do. But it doesn't mean that I should be at all concerned about my approach or about the market. And so you want to make sure that you go in with a sound approach. But this is the time to be involved in the market. You know, go in very, very small amounts, and you will learn a whole bunch in this particular period. These happen so rarely. I mean, COVID was 2 years ago. But that's rare, isn't it, mate? You don't normally get event after event that quickly. I mean, maybe the world's changed. I don't know.
And I think you nailed it with short term. I mean, if you're prepared to trade short term at the moment, your stops are the issue. But if you are prepared to trade short term at the moment, what's really happening is that, what I'll call it a spread, but that's the wrong terminology. The widening of the ATR. The widening of the average true range, the average daily true range, gives you far more opportunity to trade short term, because if you're trading intraday, and I bang on about this all the time, you've got limits, which are pretty close generally to where you're entering the market, like your DR1s and your DS1s and all the rest of it. Your pivots, your trend lines, your trade lines, they're all over the place. But now they're far wider apart. And that gives you a far better opportunity to make more money out of the market. Say if you're entering there and DR1 is a long way away, that's where you're making money in there. Look, I seriously wish I had time to stay in front of the charts at the moment. I don't, to be trading short term, but gee whiz, I'm starting to think I need to go to bed immediately after these shows and wake up for US session. That would make sense to me at the moment for the exact reason that you've just said. The ATR broadening is a very, very good opportunity to trade intraday. Yeah,
it is. It is absolutely. I mean, I don't know whether it would be a huge benefit to people, but we could go through some of these indicators and tell you what they do in some respects. But the ATR is a really useful one. I don't have the ATR on my chart all the time because most of the time it's like this. It's kind of like
it's generally flat.
Yeah. But the fact that you've just brought it up, I think is really good, because actually this thing, I mean, you don't need the ATR, I suppose, in some respects. But
you can see it in the size of the candles.
You can see it, and we all know what's going on the planet. But the ATR kind of like doing this, the trading opportunities for us short-term traders just explodes, and we've got to get involved in this stuff. It doesn't tell you anything about direction. It's almost like a volatility index, isn't it, Jeff? I mean, it's totally. A really useful one. And the great thing is that the VIX is the volatility index for the S&P, but nothing else here that we have available to us is a volatility index for the currencies or oil or anything like that. So the great thing about ATR is that we can use it on any chart, and it tells us whether we are in a position to sort of, whether the band between the highest point and the lowest point has broadened. And when you get those bands broadening, it means there might be a 3% move, 3 to 5% move in the euro dollar now, which it hasn't been, where that hasn't been there. And you need that stuff. You need a 3 to 5% move to make some money, make some decent money. But because look at this, this was a period in 2018. 2020, bang. Then it started to calm down a little bit. But, ever since really 2020, mid of 2021, and it started edging down. This is probably the range here, actually. There's the range there. But really, look at that. I mean, it really has moved very, very fast. It's really, really steep now. And these are great times to be trading, really, really good times to be trading. And the thing is, as I say, get your money management correct. Get your head straight. Don't be chasing. Don't be greedy, and you can make some money. I mean, look at this already. We've been in this trade all of a few minutes, and there's already some potential profit coming up. If you've got into the trade, of course. But there's already some potential profit coming up, and the profit might be really good. It might be, 120 pips would be amazing. I mean, look at this, mate. I mean, this is what I found astonishing. This is a 5-minute chart, and the first 5 minutes of the day we went up, 90, nearly 100 pips in 5 minutes, and that's
amazing.
That's almost a 2% move on the FTSE in 5 minutes. I mean, these are really, really good markets to get involved in. And of course, the question is, what if it goes against you? And that's where you either use your stop losses, or you hedge, or you don't use leverage. I think you've got three choices really.
And if you are using leverage, keep your risk low.
Yeah, which is the stop loss, isn't it? That's the way that you're going to control your risk with that.
Well, not necessarily. I mean, if you're trading percentages, instead of trading 1%, trade 0.25%.
Yeah, absolutely. Because there'll be another opportunity either later in the day or tomorrow. There's loads right now, isn't there?
Totally.
Loads of great opportunities. Yeah.
As I said, I wish I could spend 6 hours a day in front of the charts right now. I reckon I'd be having a wonderful time, but that's not the case for me. I was going to say something, and it's completely gone out of my my brain. which is sad.
That is sad.
I've got, mate, wait till you get to my age. It happens every 5 minutes. Shit, what am I doing in this room? You get that sort of thing going.
As long as you forget that you were having a conversation, you don't care about it, do you?
I know I came in here for a reason.
Yeah.
Oh, that's right. Happens every single day of the week. Anyway, I've got a few things to look at.
Okay, let's have a look.
This goes along with the theme that I started with today, and it was all about, I believe that there are reasons why currency pairs haven't broken out of their range. And that reason to me is reason enough to be of interest. And what I'm trying to say is, if it hasn't moved out of its range, given the circumstances that we've had over the past, well, I can't say 24 hours because it was Friday and maybe Thursday to some degree. If that hasn't happened, then why hasn't it happened? And the only conclusion I can come to from a logical point of view, forget wars, forget anything else, is that they're not ready to move out of that range. And for that reason, doesn't it make sense to want to trade the range rather than the breakout? Answer for me is yes. So that's exactly what I'll be looking for this week. Now, I'll go to the weekly game changer bars because that's kind of, where I start my week every single week. And there were 4 of them today, I think. Yep, Cad Swiss was the first. Now, Cad Swiss on a weekly chart is telling you that you should go short. But last week, it was telling you should go long. The week before that, it was telling you should go short. What the hell's going on here? Well, to me, it's pretty simple. It's in a range. It can't get out of here. And for that reason, I don't really want to follow what that candle is telling me, which is go short. Nor can I trade that short because of the size of the candle. Go back to the ATR we were just talking about. Look at the size of these candles. They're massive. To get in there and out is a real challenge. But if you can find the top of the range and trade it to the bottom or even near the bottom, gee whiz, you're going to have a pretty good ride and you're going to have a pretty good result. So that would be my focus on this pair, Cad Swiss. We've approached a strong support level. We've bounced off it. Have we got a strong resistance level? Well, yeah, maybe. There's a strong resistance level, the trend line, which is the top of the channel, and it's bounced straight off it. Okay, it was a false break. Maybe you could have picked that up on a smaller time frame. And that's the whole point of the exercise. Now, it's taken a hell of a long time to give you an entry. That may be it coming up. It'll depend on how that looks to me. But trading straight into the pivot won't suit me. But really, that's giving us an opportunity to trade it short. And that's kind of where I'm at. Just trade the structures is where I'm at. I would strongly advise you to take a look at those, the ones that haven't broken out of their structure. This is another one. Not surprisingly, the same, I guess, lineup, if you like, a commodity currency versus a risk-off currency. Look at the range that it's sitting in. Can't get out of here. For love nor money, it just cannot get out of this range. And for that reason, I'd be willing to have a look at trading this long, even if you only trade it back to that level, the trend line. That makes perfect sense to me. And even more so, as I said, because we've had this strong breakout of the market with a lot of currency pairs. Why the hell hasn't this broken out there? That's the question I ask myself. Okay, there's probably a fundamental reason for it as well, but who cares? All I need to do is see a signal that tells me trade it back into the range, and that would be a higher low for me, basically. So I'm looking at this like a hawk. I need a higher low. If I don't get it, I don't get it. But I would, I was about to say stake my reputation on it, but you can't do that because anything can happen. I really like George said before. He's accepting that he's wrong 40% of the time. We all need that attitude that we are able to be wrong without penalty. Okay, it's maybe a little bit of a financial interruption to your day or your week or your month or whatever, but you are allowed to be wrong because this is a random market, right? Anything can happen at any time. So just to get that into your scon that you can be wrong is a very important part of your trading career. Anyway, I digress. For Cad Yen, I would be looking to trade inside this range, most definitely. So that means looking for a higher low at the moment. And, you know, this is the theme. Kiwi Cad is the next of the game changer bars. And I guess where I'm coming from here as well is if the game changer bar, why is that not showing me what I need to see? Oh, yeah, there it is. The game changer bar is telling me long. I'm prepared to go along with that. Why? Because we've come off a support level and we've come back into what was the previous range that we broke out of, 2 months ago, December, January, February. January's bar, smashed it down. Now we're back inside that range. So my overall view is I want to trade this off the bottom. We've come back in. Lovely test of the weekly pivot this week would see me long if I can get that lovely little candle that tells me we're ready to go. Happy days. And this was the entire theme that I've got this week. If I can get the pullbacks on the re-entries into the ranges, or if I can trade off the bottom of the ranges to the top, vice versa, happy days. Nothing's changed. Everything is absolutely the same. We're just getting bigger opportunities, as Ash was talking about a minute ago. Look at that range there. We're down to the bottom of it again. That's the weekly chart. Weekly chart's telling me that this pair is going short. Last week it told me it was going long. The week before it was told me it's going short. Can you trust it to go out of that range? Answer no for me. Therefore, we're at the bottom of a range. What am I looking for? I'm looking to trade it back to the top. It's pretty much that simple for me. So there are, in my mind, far more interesting opportunities in those pairs that haven't broken out of that range and gone nuts, like a lot of the Euro pairs have, like a lot of the Aussie pairs have. I was expecting the Aussie pairs to go long, and that creates another situation or another opportunity because I'm expecting the Aussie pairs to come back. All I need to look for there is the contrarian view that Ash was talking about before. Don't follow those big bars, those big long bars that have closed at the top if they're breaking out the high side. Look for the opportunity to trade them back into that range of that candle, because I think that candle is probably where you're going to make some profit inside that candle, not outside that candle. So there you go. That's my kind of 2 cents worth, I suppose. What would I be doing right now? Look, I agree, Ash, with the euro-dollar prospect of going long here, short term.
Yeah.
Issue, I don't really have the reversal pattern that I need right now. That's what I want to see. I want to see a reversal pattern first.
I get you. So it probably is going to take a little while longer, isn't it, for that to maybe give us an inverted head and shoulders. It's going to have to prove where it is.
The hourly chart's telling me, pretty much what you're saying. I don't know if you classified that as a morning star, but to me,
yeah, you could use it.
Yep, that's a potential reversal, and it has, interestingly, that red line I've got on my chart. I haven't just drawn there; it's been there for a donkey's age. It's showing me strong support, and getting back above that is probably crucial to the prospects of this potential trade long. So on the daily, that's the line I'm talking about. If we can actually get a close above that, that would be really interesting. I mean, as what I said before, if you're getting out of trades at the moment, the technical levels work so well. And like I said, that level is not something I've just put on my chart. It's been there for ages. So I recognize it. And so does the market. If it comes above that level, which it's threatening to do, that's what I want to see. If I can trade from here and take some profit there, so I can safe in the market, then I've got a free ride up to the pivots, and that really does make sense to me.
Yeah.
I like the fact that we have had a potential reversal here, so a higher low in this vicinity makes perfect sense for me to trade it up to there. What's the percentage? Those guys who are in the slingshot group, what's the percentage of euro dollar hitting the daily pivot at some time today? Look at all those hands up are saying between 70 and 80%. So why would I want to trade away from that? Doesn't make sense. So yes, I can totally see why there's an opportunity to trade this long, but you've just got to get the timing right.
Yeah, I think that's the key, isn't it? I mean, there's money to be made in this market, but the timing is the challenge. You know, the timing for anybody is the challenge, which is why, I quite like levels, because at least with a level, I mean, there's a lot of kind of give below the level, and maybe that's the thing that Gary's talking about with the, where do you put your stops? And it's a tough one in a lot of ways, because where you put your stops in a market like this, they could get taken out, and then it could reverse pretty much wherever you choose. But because it's so volatile, you might be right and still get stopped out because they're so wide. It's not going to respect the levels probably during the time frame. It's much more likely to respect the levels on the close. So the other option is that you allow the market to come down, see if it retraces, and then put your stop in, or you allow it to come down, and if it closes below the level, then you just close the trade. So you could do it manually as well, but it's not easy. I think sometimes with a specific approach, it doesn't always work as well in every condition, and you do need to adapt the approach. It's not that you change it, but you do need to adapt the approach when you get a condition which is unusual, and we do have a condition which is unusual, so you have to broaden things out a bit.
Let me show you a prime example of that, Ash, from Thursday.
Yeah,
I flagged this. I don't know if we did. We were going to trade this in the in Trading Buddies. Sorry, I get in so many webinars, I'm not sure where I'm at, but we were going to trade this in Trading Buddies. This is pound US dollar, and we called this as a short, as a clear false break, not only of the resistance trend line, but of the horizontal level, which is probably not evident from there, but you can see it's got history. So we were pretty confident that if it broke below here and gave us a signal, and not only that, we had reason to believe that we were back inside the range, which of course for me is the descending channel. So we figured we could find an entry here on the 30-minute channel as a false break of that white line that I just showed you, but also we had a resistance trend line, or trade line really. It's not a trend line. And I said, if I get a bullish bar, we had to close out of this, right? If I get a bullish bar, and hopefully it closes there, but it didn't, it closed here. So I couldn't trade it because of trading straight into the low of the day.
Yeah,
those of you who are in the room will probably remember me saying that.
Yeah.
But then we got a second opportunity with a retest of that level, a new trade line, right? So a different trade line, but we got a break of that trade line, retest of that trade line. Had you taken that candle, you would have got a TP1. That's all, because you would have got taken out. The way I trade, right? I've got to take profit before the daily pivot. You know that. So I couldn't take that trade and not take profit here. So I would have been taken out at break even. You got another retest of that trade line. Candle, I wouldn't trade that one. In fact, I'd trade that long, if anything. Then another test of that trade line. So I was telling you, I don't want to go, I don't want to go, don't want to go. And the only way I could have got actually money out of that without a break-even trade was if I didn't do anything after I placed it. So my stop loss is still here. My entry's here. If I'd taken it in the first place, and I get 20 pips of risk, currently 220 pips a gain. So there's a 10-to-1 bagger that has just gone begging because my system doesn't cater for that.
Yeah. Yeah.
I'm putting together a test group at the moment which tackles that exact problem where, okay, we can't take the trade because of the rules, but can we take it after the rule has actually proved itself? So in other words, can't trade it short here because of that. It's the low of the day, don't want it. But what happens if I get in here, same level, same trade, but I still got my stop loss here? What happens if that happens? So I'm forward testing that with my test group.
Does the test involve the environment that you're trading? Because that's the thing, isn't it, mate? And that's what I guess my point is that strategies and approaches are one thing, but the market conditions change, so they need to be massaged somewhere.
100%. Yeah.
Yeah.
So you've got a set of rules for non-war situations, if you like. Well, it again goes back to the ATR and volatility. If volatility is high, then adopt that approach. If volatility is low, adopt this approach.
So I guess maybe the test involves the ATR as well, does it?
100%. Yeah.
Yeah. Brilliant. Yeah. I mean, the FTSE's an example of this as well, and this is difficult. This is where I find it really difficult to advise people, of what they should be doing, because look what happened here. FTSE breaks down below the low. Now, we don't know how this bar is going to end up closing up. This is probably more of people's strategy in many respects. If this bar ends up closing like a hammer or a low test bar, then it's probably more people's strategy to enter that long anyway, which is in this scenario, it looks a lot safer. But if you do what I do, which is just pick a level and get in, then look, was it there or was it? No, it was that one. No, it looks actually like this is a short now. I mean, to my mind, it's not, but that's the way that it may well go. It may well just get resistance off this level and go down. But look, that's just a case in point. Doesn't hold the level, breaks out, but it still might end up being a long.
Yeah.
So where are you going to put your stop losses? But then you could have got in here with a stop loss down there, and now getting here with a stop loss down there. So, if you're only risking 1% now at this stage, if you're sort of like saying, okay, well, that's a 60 pip bar. That is crazy. A 15-minute bar, which is 60 pips. That's a 1% move. But you're still looking at potentially 100, possibly even 200 pip gain, depending on where you come out. Maybe even more if you hold on to it. Difficult. Where these stops go and how you approach this market has to adapt. You have to adapt with it. Great market to trade. Great, really, really good market to trade. You've got to be strong. You've got to be, relatively sure-headed about what you are doing. But if you are those things, then it's fantastic. If you're not quite there yet and you find it difficult to kind of control either emotions, psychology, your money, whichever those things, then trade at a very low, really low risk. Because I would still encourage you to practice in a market like this.
Yes, agreed.
It's a market which it will either return money or education, and as long as you're not risking the house on it, it's fine to just to allow yourself to get some education out of it.
Yep. Look, I think that's the message. If you are going to be in and you're not sure, low risk. It's not difficult to say, okay, here's an uncertain outcome. Every outcome's uncertain, but if the outcome goes in my favor, there's a 4 or 5%, or as I showed you, potentially a 10% bagger, then perhaps it isn't that silly to put, your 0.1s or 0.05s of a lot, whatever it works out in micro lots. Just need to taste, I think, exactly what's going on at the moment. I think that's a great point, Ash. I've got to fly. I've got another meeting coming up, and then I've got another one at 8:30. It's all happening on a Monday. Yeah, absolutely.
Okay, brilliant stuff. Okay, mate, thank you very much, as always, for being my trading buddy, and everyone else, thank you for being our trading buddies. We will see you on Thursday. and we'll see how we got on with this particular trade. But you know, stay safe. That's the thing. Stay safe, but get educated. You know, don't be scared of the market. This is not. We're not meant to be scared of the market. We just need a sound approach, and everything will be absolutely fine. Happy trading, but thank you. Who was it who was looking after us today? Jeff, was it Anita?
Anita.
Thank you,
Leave us on
Anita.
the job.
Thank you,
You're
George, too.
welcome, Ash.
Yeah,
Sure.
we'll see you
See you
soon.
guys soon. Take
Have a
care.
great week, everyone. Right. I will update the Telegram group. We've got a slingshot Q&A in about 30 minutes time. I've got a meeting immediately. So have a happy week and make some money. Thanks for being our trading buddies. Bye-bye for now.